Right. So in this session, we are going to discuss about commercial general liability policy rating. Because for any organization, if they have taken any commercial general liability under property and casualty insurance, we, for example, for the tenure as I have taken, right? So tenure from August 1st to August 1st of 1 year. So first of all, we have to uh, mention about the name of the insured company, followed by what are the business operations they belongs to, right? At the same time, what gross annual turnover they have. Okay, all that information must be knowing for us. So this is an insured company where we have mentioned as an example here. We have taken. Next, their business operations, they are into freight brokerage and warehousing and all that. And this is what their gross annual turnover. Including we are taking some full-time employees also. Full-time employees means working people who are working for full-time. It's not contract basis, who are under the payroll of this company. So the full-time employees list, because this is commercial general liability, if there is any kind of risk that is associated, which will be covered. So that's the reason why we must be knowing about what is the gross annual turnover, including full-time employees, we must be knowing. Next, prior to that, whatever the 3 years loss ratio, average percentage has taken, which is 18.5, as an example. Okay. And where operations are belongs to, that was mentioned over here, which is a primary state mentioned, including in ISO code, right? So, and how much SFT this warehouse space consists of, okay, a space of this thing. So, warehouse space mentioned, including subcontract cost. Okay, followed by any desired deductibles, etc. All that. So these are the basic details for any insured risk exposure that we want to perform. So this will be mentioned here. This is the first thing. Now, for this, what should be the premium and how this can be calculated? This is important because whenever we are working on some guideware application or something of that kind, so premium will be calculated by the system because we have a rating engine there. Okay, rating engine will calculate based on the risk assessment, based on the rate table. It also, or it always, it calculates the premium. But whenever we are working on manually, okay, because you must be knowing about how this rating engine works, okay, how this will be calculated and what are the critical components that will be taken to calculate the rate. So that understanding is required. The example is intended for that, okay, because application will automatically will calculate the code, but how this code has calculated and what are the key components will be taking into account is something that we must be knowing. So this is what the next one, right? So because commercial general liability, because exposure rating premium calculation we want to do. First of all, we have to list out all the coverage components. What are the different coverage components and all? For this commercial general liability, we have taken these components. One, premises and operations warehouses that client is using, insured person wants to is using. Okay, that one will be taken as a coverage component first. Second, what are the different products they were doing as far as the freight brokerage is concerned, that we have taken. Next, contractors contingent liability, because if there is any kind of subcontracted operations which are located over there, so that can be taken even there. Next, personal advertising and injury coverage will be taken as well, because if there is any person whoever got injured, which normally in our terminologies we call it as bodily injury. Okay, personal and advertising injury coverage will be added, followed by any medical payment coverages will also be added. So these are the coverage components we have taken at the first level. Second, what should be the exposure base? This is an exposure base here. Let's say we have taken premises operation, warehousing and all. We are taking exposure base as 1000 SFT, right? So 1000 SFT is the one. Second, for products and all that, we have taken $1,000 in conversion of dollars and all. Gross revenue is $1,000 for the products which they are doing as a freight brokerage coverage. And contractors contingent liability, 1000 per sub cost, because this is for the subcontracted operations, so that we are taken average of 1000 per sub cost. Okay, that is per, it is per unit I'm referring to. Next, personal advertising injury coverage, wherein we have taken 1000 as a gross revenue, followed by medical payments and all, flat charge per location, because this is a flat standard fixed charges will be there. So this is an exposure. So what is meant by exposure? Exposure means the kind of inherent risk which is associated. So that is called exposure base. So exposure base is the second one. So when we are going to calculate the rate premium for any application, generally these are the standard components that we can see. But in comes to our example is concerned, when it comes to the commercial general liability, cost components, these are the cost components, and followed by this, and these are the exposure basis we must be knowing. Next, what should be the exposure amount? Exposure amount is this. This is what the exposure amount we have calculated. For 1,000 SFT, we have taken, let's say that 120,000, right? The exposure amount is taken. So this is 18,500,000 is per gross revenue, because per product that we calculate, this can be multiplied so that 18,500,000 is the exposure amount is taken. Here, this is taken even for contractors contingent liability, including personal advertising and all. Medical payment coverage, anyway, we have taken as one, because these are the flat charges per location. So limit will be this, because normally here the fundamental understanding when there is any insurance coverage referring to, as long as we are increasing the coverage, your premium will also get increased. That is the fundamental rule we need to. For example, we have taken a property, right? So wherein the property coverage, we want to show it as $1 lakh, for example. Okay, that is the coverage limit you want. So $1 lakh, automatically the property, the insurance premium will also go higher. So here in the medical payment coverage, we have mentioned as $10,000 limit is the limit, right? So that is an exposure amount we have taken. Now, whenever there is any rating calculation, this is called rate table. Okay, so here you can see this is what rate table is. Base rate per unit is something that we need to consider. Base rate is $14.50. This is the base rate we have taken. Next, about $1.25 is the base rate, right? So for this products, this is a base rate we have taken. Next, for contractors contingency liability and all, we have taken 0.45%. This percentage of base rate per unit can slightly vary from company to company, because depends on the kind of insurer. Insurer nothing but an insurance company, whoever is providing risk coverages, etc. This base payment can vary. Okay, this percentage can vary, etc. This is all base rates per unit will be. This is all per unit. Okay, how many number of units you can multiply that. That's how it works. Next, what should be the base premium? So based on the base per unit, so we have taken a base premium of 1740. That is the first one. The 1740 is the base premium we have taken for premises operation cost and all that. Whereas for the products, because products cost will be much higher, because freight brokerage charges and all that. So hence, this will be at the higher level. $23,125 is the base premium we have taken, and followed by this medical expenses, including the personal advertising injury coverage, right? So this is all will be taken as 1480. Now, in this, there can be some schedule of modifications might be taken place, depends on the risk coverage that is associated. So this 1740 premium, as it been mentioned, can be up to minus 10%. Minus 10%, I can say. So like this, minus 5%, minus or plus, okay, or is in between, okay, 0%. If there is any schedule of modifications, etc., that will be calculated by the system here itself. And finally, whenever we are modified the premium, this is what. So because here you can see, you can calculating $1740. On that minus 10% we are calculating. Okay. So for that reason, it is average of coming around 1566 of that kind. And 125 on that minus 5%, which will be 21,968. And this remains the same because there is 0%, wherein we don't see any kind of changes here. This is 50%, where you can see these are the observations we need to know. See, it's not only about the calculation that we are doing or the calculation that we understand. So we need to see what we have observed finally, and what recommendations that we want to be provided is important. Under the subcontingency liability cost is concerned, if you see here, there is a schedule modification of minus 15% is given out of $5,400. So hence it was somewhere around 4590 is something that we has mentioned. So the total commercial general liability technical premium is concerned with $29,954. This is the premium. Okay, this is the total technical premium it was. this it can be including, right? So you are including the policy inspection fees. At the same time, state guaranteed fund taxes will be added. So the total quote per CGL annual premium will be somewhere around 30 to 840.50, $850.24. So this is how the system will be calculating the premium. Okay, this is how generally the system will be calculating all the premium. This is how general rating engine will works with. So because on the application, as I mentioned you, it will automatically calculate, but we need to know how this calculations takes place practically, right? This is how generally an example is being used for. And if there is any changes that is made, that's called, we call it as endorsement. Endorsement means, let's say the policy has issued. Now we have identified some changes and all those, that is called logistics endorsements. So these are logistics endorsements followed by any code proposals, etc., that can be discussed over a period of time in coming days.